By early 2025, foreign investors had already withdrawn $6.5 billion in just 1 week, while an additional $8.9 billion in investments stalled, frozen midair by growing uncertainty. Why this rush to exit? Political turmoil, unpredictable trade policies, soaring national debt topping $37 trillion, and powerful global players quietly selling off US assets have shattered the confidence investors once had. $41 trillion figure represents real holdings across stocks, corporate and government bonds, real estate, and reserves, roughly a third of these markets. How did the land of opportunity become a minefield for global capital? At the heart of this crisis is a growing perception that the US is no longer the stable, reliable haven it once was. President Trump's re-election in 2025 marked a turning point. His administration doubled down on tariffs, slapping import duties of 10 to 50% on goods from over 60 countries, including allies and major trade partners like China, India, the EU, and Mexico.
When you look at how the U.S. has approached with making a lot of these threats, the challenge is that the shock value of these threats continue to diminish every time a threat comes, but it isn't executed upon. So what you really need for credibility is that you have to have some clear plan, some enforceability along that discussion path as well. But of course, we can't underestimate the U.S.'s ability to continue to add more shock value in more threats going forward. So I suspect the type of leverage the U.S. has, certainly as the largest consumer market in the world, will continue to be a factor that'll cause other countries to think cautiously. My guess is we'll continue to have an extension going forward, at least until Xi and Trump have a way to meet each other one-on-one. But even after that, after they've set the tone that negotiation is still in the cards, we'll probably continue to see different levels of extension, maybe by sector, maybe by tariff categories and so forth.